Hello everybody, it is 12:25 a.m. 9/16/2021. Let's get some prices here. Just going to go over the top 6 or so. Bitcoin 48,296, Ethereum 3,672, Cardano's at 248. Cardano just released their smart contracts. Some things may be a little messed up looking on your OE, but you can still delegate. Binance Coin BNB is at $431. Tether, of course, being a stable coin, is at $1. XRP is at $1.12. We're going to talk a little bit about that today. And then Solana is at $156.32. My bad, using slang terminology there. Polkadot's at $36.10. Dogecoin is 1 penny under a quarter. And USDC is, of course, another stable coin, which is $1. So I said I ain't going to do that, so we're not going to dwell too much on the prices. They fluctuate all day long. Check them out on CoinMarketCap. Still staking in the auto cake pool. You guys can see here I'm at 4.57 cake. And the cake price, I believe, is back up to $22. So still $3 under when I started staking. But you can see here I am above the 3,000 mark. We did, I think, dip down under that for a little bit at the 2,999 area. So in another, once we go back up, when or if we go up another $3, I will be able to cash out, and this will be profit. It's all profit now to me because, of course, I still have my coins, right? And I could sell these, and I would still have what I originally had coin-wise. But for the sake of argument, we'll let the naysayers and the bears and the haters say right now that I'm losing money, even though that's debatable. We'll take a look here at some pools that are available. Of course, you got the auto cake, the manual cake, and now that once again, this is Pancake Swap, and this is ran on the Binance Smart Chain. So if you're in your MetaMask, you gotta go to Binance Smart Chain mainnet, and to do that, you usually have to use the Binance wallet. You can create a free account. Remember your seed phrase. Always write that down. And then inside this wallet, you switch from the Binance chain to the Binance Smart Chain. And inside the wallet here, it will convert the BNB to the Binance Smart Chain BNB. And then you can send it to your MetaMask, and you can start buying and doing all this stuff on Pancake Swap. And it's a little confusing to a lot of people, but it's really not. And then the same thing, you can send the BNB back to the Binance wallet, and then you can switch it from Binance Smart Chain back to the Binance chain, and then you can put it on Binance and start trading and doing whatever. So you have to be careful with that, because different networks, if you send coins from the one network to the other, some chains will return it, and then some chains it'll be permanently lost. So always be careful when you're doing that. We're gonna read this article here real quick, and I'm gonna turn on my air conditioner. It got a little warm. So sorry if that gets loud in the background, but I came across this article, and I really liked what it had to say, so I figured I'd read it to you guys in case you're just driving or in bed or playing your game and you got this playing in the background. So this is by AMBC or AMB Crypto, and it says why sticking it to Coinbase and Ripple isn't the best move from the SEC, and this is written by Biraj T. I believe is how you would say his name. It was published one day ago on September 14th, 2021. And if you're not looking at the screen, it's got an image of a pair of glasses on a book. I'm not sure what book this is, but anyways, that's the image. And it says SEC Chairman Gary Gensler visited the Aspen Institute for a conference this summer and made it clear that the rules were awfully clear on digital assets. He said something similar in a recent interview with the Financial Times, urging blockchain and fintech developers to talk to us, come in. The fate of the industry, like all finance, is about trust, he added. Encouraged by those words, one of the biggest companies in the crypto industry, Coinbase, moved in for guidance on their new product. What happened next? Well, Coinbase was slapped with a Wells notice faster than it could say regulator clarity. This is now yet another chapter in the SEC's love-hate relationship with cryptocurrency organizations. This time, however, it might be more personal than what meets the eye. And we talked about this in one of my videos, but let's continue on. It says, Brief flashback in 3, 2, 1. As reported previously by AMB Crypto, the United States Securities Exchange Commission, known as the S.E.C, recently served Coinbase with a Wells notice on a silver platter. A Wells notice is how a regulator tells a company that it intends to sue the company in court. The notice in question came on the back of Coinbase's Lend program. Needless to say, Coinbase CEO Brian Armstrong is at his wit's end. Now, take a brief pause here. In a couple of videos back here, I actually went on Twitter and I showed you what he had to say and how he was kind of worked up about it. Because it is kind of a slap in the face when people like Ripple and Coinbase, they go to the SEC and they say, hey, can you give us guidance? Do you have laws written in black and white? We're trying to help investors. We're trying to make money. We're trying to grow the economy. We're trying to help out these well, they're helping themselves off the fees, but let's get real. I mean, it helps us as well, and we're going to go into this in a second because this article breaks this down really well. So let's continue on. And it says, on Twitter, Armstrong claimed that the threat of legal action came as a surprise since the organization has been speaking to the S.E.C for weeks before its lending product launch. Now, while many in the community are empathizing with Coinbase, it's hard to look past the level of naivety displayed by the public company. I mean, what did you expect, Brian? A kiss and good luck greetings from the most ambiguous regulators in the United States? Now, that's not me being sarcastic. That's actually written in the article. And then it says, SEC's Coinbase reaction is not surprising. Adding Coinbase to its list of dissatisfied customers, it is not at all surprising that the SEC has continued to go on the offensive against cryptocurrency-related organizations. Regulators has often maintained their apparent high horse opinion that the sheer size of digital asset ecosystem compels them to make sure these operations lie with the ambit of existing laws and guidelines. However, Ripple is standing right on the side, and the SEC hasn't played exactly by the rules. According to Armstrong, Coinbase was not provided with any conclusive explanation as to why their lend program or their potential lending contract is being looked at as scrutinization of an asset in the case of USDC, which is US dollar coin, which we just talked about on CoinMarketCap, which is a stable coin, which is 1-to-1 with the US dollar. It resonates fairly well with the fact that the commission has also denied Ripple's motion to prove its Howey test application. And if you're not following the Ripple lawsuit, just a quick update, another little break in this article, and I apologize, is the SEC recently handed the judge of the presiding over the case documents and said that they were for her eyes only, her eyes only to read. And with that, to me, that's burying and prolonging this court case, because it makes her examine each file one by one, and she has to determine if Ripple, their team, can see the paper or if it really is like classified information. It's a bunch of bullshit, and the SEC is really screwing the little guy. They're screwing the investor. They're screwing these corporations. And you can love or hate Coinbase, right? I got a love-hate relationship with Coinbase too. They're down all the time when things were peaking, but to grow this space, we're gonna need these fiat on and off ramps, and we're gonna need these exchanges. So it's kind of like spitting in the wind. You can spit on them, but it's gonna come back on you. And I think with the SEC, we don't need to make more animosity and hate in this space. So when you see people talking bad about these exchanges, I get it. You get worked up sometimes, but it's not, in the long run, it's not good, and it's also not good to be putting down other coins and projects. We want to see a lot of coins win. Yes, there's some trash coins, shit coins as people call them, but the goal here is to see people win. And unless they're getting rug pulled or they're a really sketchy program, I'm not going to be spitting hate from this point on. It doesn't help no one. But continuing on here, in fact, the SEC gloriously responded that Ripple did not like the answers they received. Hence, they were pushing ahead with the motion. But aren't regulators supposed to explain the reasoning behind such lawsuits? Coinbase executives are pondering over the same question, just like Ripple a few months back. Additionally, the SEC has demanded the exchange provide customer information from its lend program waiting list. This is the SEC trying to breach privacy violations, further lending credence to the impression that anti-crypto sentiment is popular among key policymakers. Now, and we all know that's the case. But here's where it gets real interesting, ladies and gentlemen. And I want you to take, if you're not looking at the screen, you might want to take a look. If not, listen to what I'm about to say on this part, particularly really closely, because this is the bread and butter of of the article, and I'm going to go on. An ulterior motive to protect the traditional financial system. Before dipping our toes into the narrative, here is a recap of what Coinbase lend program is all about. The proposed plan is that the exchange will allow its customers to lend their USDC on the platform in return for 4% annual interest. 4% annual interest. Now, USDC is a cryptocurrency, but is also a stablecoin. Hence, its value is more or less $1 at all times. I told you guys this. Now, a 4% annual interest does not sound like a lot. However, for comparison, here's the breakdown of variable rate products for consumer customers at Bank of America. And just to clarify this, the standard pricing, right? Account balance less than 2,500 is a rate of 0.01%. An annual percent return or yield is 0.01%. If you have over $2,500 and over, the rate is at 0.01%. APY 0.01%. What did Coinbase propose? 4%. That is dramatically higher. I showed you guys this on PancakeSwap a second ago. My percent return is 80 something percent. Now of course that fluctuates up and down. It's not a stable coin, but 80% in DeFi. I want you guys to understand this. And then continuing on, it says preferred reward tiers with interest rate booster. A gold account less than 2,500 is 0.02. 2,500 and over is 0.02. A platinum account is less than 2,500, 0.03. Over 2,500 still 0.03. Platinum honors less than 2,500 is 0.05. Platinum honors with 2,500 over is still 0.05. Preferred rewards or wealth management account. The balance 2,500 is 0.05. Account balance 2,500 and over still 0.05. And then the article continues, as illustrated above, the annual interest offered by Coinbase is much higher than Bank of America. According to data, 4% annual interest is 8 times higher than the national average for savings accounts in the United States. 8 times higher. Crypto, they're trying to offer you returns that are 8 times higher. And the S.E.C is spitting in your face. They're giving Coinbase a hard time, and they're keeping you poor. I don't care. There's no other way for me to say this. They're keeping you poor. They don't want you to make interest. Aren't they supposed to help the little guy grow? Aren't they supposed to help the little guy make money? Aren't they supposed to protect retail? Where's the disconnect here? Hope you guys are really seeing this now. Now, it is easier to understand why the S.E.C would want beef with unregulated crypto companies, especially when their beloved banks are facing the threat of capital outflows. Coinbase is currently offering higher annual interest than banks, and it's also a publicly listed company. Its quarterly trading volumes of 500 billion can be enough to bring potential customers to its lending program. This would invariably result in capital flows from banks to crypto assets. That means people would pull all their money out the bank and put them in stablecoins, because stablecoins, which you can use with a Visa credit card now off of Coinbase, would give you higher yields than your bank account. And it's faster. And it can be tracked easier. Crypto is, I don't get how people don't see this. The S.E.C may be ambiguous, but the agency and its executives are not stupid. In fact, they have likely identified the bigger picture. The S.E.C's legal action against Coinbase might also be an indication of upcoming federal enforcement against crypto lending, and what better way to send a message than going after the blue chip brand of Coinbase. And then it goes a little more, and well, I'll just continue on here. Are Coinbase's hands clean, though? And then this is where it gets a little interesting, too, because it talks about the IPO. And it says, without sounding like a cheerleader for the exchange, it is imperative to follow both sides of a story. Now, it might be technically incorrect to suggest Coinbase's arguments about lending hold up against a scrutinized asset as far as U.S. securities laws are concerned. A lending contract can be proven as a security by the way S.E.C has conducted the matter can be considered out of line. However, there is a potential hook. According to David Cornelius, the S.E.C and Coinbase have been having these conversations for about 6 months now. That is at least a month before the company went public in April 2021. Now speculations are rife that Coinbase might have known earlier that its lending program will fall under a security banner. And this is where it gets a little interesting. Coinbase had to opt to go public before launching the lending program because the credibility of being a publicly listed obviously goes a long way. And if you're unfamiliar, now Coinbase didn't have stock options before, but now they do. You can buy stock in Coinbase if you're into stocks instead of crypto, or if you're into stocks as well as crypto. And we're going to go a little bit deeper into this. And it says, consider this. With respect to insider stock sales, early Coinbase investors dumped $5.44 billion worth of stock in retail within 145 days. That is a time more than the recent list of companies launching their IPO. Hence, Coinbase executives' argument that they had no idea about the lawsuit until recently may be fallacious. The S.E.C hasn't responded to those claims yet, so there is still something to look out for now, for those, or something to look out for. Pardon me, I got mixed up there. I want to talk about this real quick, and I want to go ahead and I'm going to say I'm on Coinbase's side on this, and I'm going to tell you why. Before you can buy a stock, an accredited investor, when I say before you can buy a stock, the average man, all right, you don't make $100K a year, your net worth isn't that high. You don't even have the option to buy stocks before they go public. So part of what's wrong with our system, and another reason that I say fuck the S.E.C is, if we're in a true free market, a guy with $5 should have the same buying power as a guy, not buying power, but the buying options as a guy with $1 million. They might not be able to buy it, but they should still have that option. And guess what? That's not the way it is. So these guys who are accredited investors, right, they have a certain amount of income. They have buying options and powers you do not. So what they could do is buy Coinbase stock, right? And this is what they do with other stocks. They buy them, and then when it becomes an IPO, when it's offered to the public, right, initial public offer, when before it's even offered to you, they already have stocks. So once the public gets in, all these assholes that bought in earlier, right, the stock rides up because all the news comes out. Everyone's like, oh yeah, us masses, we can buy the stock. What do the early guys do? They dump it. I mean, this is common sense, right? Buy the rumor, sell the news. Who's buying the rumor and selling the news? The rich assholes who are accredited are buying the rumor and selling the news. They're buying it because they can buy it before you, and then when the news comes out, they sell it on you. This is common sense, and if you're not following what I'm saying, I feel bad for you. But I think it has to be talked about, because this right here is a bullshit ass statement to me. And it also coincides with the price of Bitcoin. If you guys weren't following the price of Bitcoin, what did we have around that time? We had almost a 60K Bitcoin price, and then we dropped all the way down to 30K. So I mean, come on now. And it says, no one wins the feud. Global financial innovation is currently at risk with the S.E.C Coinbase feud. It is not often you have billionaire investors like Mark Cuban indicating that the S.E.C's actions can lead to trillions of dollars being lost in economic benefit for the United States. That is definitely true. While Coinbase's hands may not be clean here, it is also unfair to suggest that the lending program is wrong or immoral. Coinbase is propagating a properly vetted process for their investment program so that they can disassociate USDC from any type of price volatility, such as cryptocurrency products, may help the general investor bridge the gap between existing investors. It's not a rich getting richer situation anymore. Without such options, a majority of the population is with nominal zero interest bank accounts. Those aren't great alternatives either. S.E.C's episodes with Coinbase and Ripple are reflective of the rigid financial regulatory system. The S.E.C ain't winning any brownie points by stamping its authority, since the likes of Coinbase will continue to push the boundaries of fintech and crypto upheaval. And I 100% agree with this guy. I mean, they're doing nothing but, like I said, they're slapping us in the face and really prolonging this, and it's hurting no one but retail. And I get that you want to protect retail. Sure, I understand that. There's lots of rug pulls. There's rug pulls in NFTs. There's rug pulls on the market. Mark Cuban got hit with a rug pull on DeFi. I mean, this shit happens. There's people who make fake NFT accounts, and they're unverified, and people buy those. And there's so much scamming stuff out there, right? But Coinbase is a giant. Ripple is a giant. They're not scammers. I know they get a lot of hate, but this is stupid. They're multi-billion-dollar corporations. They have working products. They have working teams. They have code that works. Just just a really good article, and I'm going to link it below. And it's food for thought. And if you're not involved in this, I'm not talking politics. Uh, you should really understand how much they're really they're really spitting, and yeah, I'd go to say they're pissing on us. Um, they're pissing on you for me being able to make money. Your bank account doesn't make nothing. In DeFi, you can make money. Uh, you would be able to when they if this ever comes out and they finally do accept it. 4% is a huge return on 0.01. I mean, that's drastic. But food for thought. Want to share that. A couple other things I want to talk about here. I've never been big into NFTs, such as the whole image thing, but this is another neat concept that's coming out. And let's do a quick time check. Where are we at here? I'm not even sure. Uh, you know what? I'm gonna close this out. I'm gonna do another video, and I'll post that. But I really want you to think about this article here, and I'm gonna link it below. And I hope this is clarifying some things. And I'll make another video here on the NFTs in a second. But ladies and gentlemen, you have a good one. I hope this has been informative, and I hope it's an eye-opening talk that we just had. Have a good one. Catch you guys next time. Stay blessed.